Welcome back. We're watching oil prices this morning back above $50 a barrel, hovering right near it, up 1% today. The move coming after Iraq's oil minister said that OPEC is considering extending or even deepening its output cuts. Joining me right now is the chairman and CEO of Continental Resources, former Trump presidential campaign senior energy advisor, Hamm. Harold, it's a pleasure to see you again. Thanks so much for joining us.
Good to be with you, Maria.
Do you agree with that assessment in terms of why oil is where it is right now, because of this idea that OPEC is going to cut back?
Well, not entirely. That always helps. They've done their part, that's for sure, for the last year. So they've been, in compliance, and that's what they set out to do. So that's good. But we're seeing a couple other factors. One big factor that's out there is that EIA over forecast what U.S. production was going to be for this year by about 100%. So they recently, with their September short-term energy outlook, they made an adjustment of 130,000 barrels down. There should have been about 500,000 barrels, actually. We're showing about 9.35 million barrels to 9.4 million barrels by the year end for the U.S. In comparison, their prediction was 9.8, 9.9, close to 10 million barrels. And everybody listens to EIA as the governmental authority here in the U.S. So they're way off. They need to adjust. We brought this to their attention, and they made a small adjustment. So we think that's a good reason for this small uptick. So what does 500,000 barrels mean? If you look back, when Nigeria and Libya brought on an extra 400,000 barrels, the price was hit some 20%. It went down $53 to $43. And we feel like that's about the adjustment that's due right now.
You make a really good point, because over the last year, certainly as the president has been out talking about the potential of the U.S. Energy resources, a lot of people thought, well, there's going to be a lot of production in the U.S., and that's going to send prices lower overall, because we're talking about a global marketplace. You've got more product coming from the U.S. You don't see it like that.
Well, I do see it like that. We do have a lot of energy in this country, don't get me wrong.
Right.
And we have a lot of energy capacity to produce. But, operators are doing what they can with today's prices. And so they've cut back, OPEC cut back, and the market needs to realize that. Energy producers in this country are showing great discipline, and they're not being rewarded for that. And it's distorting the market. When you look at historic Brent and WTI prices, I mean, recently it's out to $6 a barrel, and right now it's about $5 a barrel. So we're taking a beating in the U.S., of some $3 to $5 a barrel. So are we putting America first? Absolutely not.
Yeah, that's a good point. Real quick, Harold, in terms of where this is going, would you be putting new money now toward energy assets, given this current supply that you're expecting and the demand story in the coming 10 years?
Everybody cut CapEx. We did a survey of all the public companies in the second quarter, and what we found was CapEx was down about 1%, and so was production for all those public companies reporting. So they're doing what they ought to do with this low price. We said, and I've said over and over again, that prices below $50 a barrel is unsustainable for energy supplies in the world. And that's what's playing out here. So, $50 a barrel, you're not getting enough to... One inescapable fact, the lower prices are, the less capital that you can invest for production and energy in this country.
Yeah, that's a really important point. Harold, it's great to talk with you this morning. Thanks so much for weighing in.
Yeah, thanks, Maria. Good to be here.
Harold Hamm joining us there, CEO at Continental Resources.